Hello, you are watching BiTV European Service. I'm Ines Boget, and today I welcome Damian Harrington, who is Head of Research, EMEA Research for Colliers. Hello, Damian. Thank you for joining us.
My pleasure. Thank you for inviting me.
So Colliers' latest studies reports that the residential sector has seen the biggest rise in investment volumes of any real estate asset class in Europe over the last investment cycle, which accounts for 22% in 2020, sorry, up 8% from 2009. How do you explain this strong renewed interest from investors?
Okay, I think there's always been a lot of interest in the residential sector, but there perhaps hasn't always been the expertise within the funds and the fund managers or the experience of the market. So if you look across the pond, as it were, to the US, it's always been a much bigger feature of the investment market. I think last year it got up to 37%. And a lot of North American capital has obviously been active in Europe now for at least one cycle, the past cycle, and getting more involved in the market. That brings that experience with it, alongside some other established players. So amongst the fund management community, the experience and the need to want to access the sector is there. It's just tapping into it and understanding it, getting comfortable with it. But it was always a kind of no-brainer to me, certainly, that it would grow its market share over time, because it is very much a need-based asset. It's very defensive, and that quality has really shown through during the COVID pandemic.
Right, and what are the main fundamentals for to make a residential market interesting to investors then?
Well, lots of things. Obviously, you want a dynamic city, a city that is a magnet and brings people to it, that is expanding, has a strong, robust, diverse economy, has a mixture of people by age, but growing household formation and household growth happening in and around the city. So we focus particularly on many of the major markets, and in pretty much every market, that is households are growing in urban locations, even though in some countries, the demographic change means there's limited population growth. But so the household formation is a key factor. The other factor is affordability, lack of supply, and that's bringing investors more into the build to rent side, not just into terms of looking at actual assets that they can acquire, income producing assets. So there's lots of different factors like that that actually generate the interest in the market and in particular cities. But it's particularly about affordability. Almost the less affordable the market is, the higher the propensity there is for people to rent and rent for longer. The more diverse, the bigger the city, the bigger the pool of people looking to rent. And obviously, cities that encourage mobility will see people moving around. So that mobility in itself means people are going to be renting for a bit longer rather than settling down and nesting, as it were, in one specific place.
Right, and finally, I have one last question. How does France and Paris in particular compare to other European markets?
Yeah, I think one of the interesting things with France is, I think from our analysis, it was the least affordable market for owner-occupiers as a city. So based on average incomes, you'd be able to buy less space in Paris than anywhere else. I think it was around 11 square meters, which suggests again that lack of affordability is a big push towards people renting, and perhaps renting for longer till they can save up more money to actually buy. So that's obviously a big factor behind a popularity of Paris. Paris as a city is decentralizing, so it's creating lots of new opportunities around key commercial areas around the city rather than just in the center. So that's definitely a big growth factor, and the new infrastructure that is being built will definitely support that. And ultimately, it's one of Europe's two super metros, two super regions alongside London. So that's always going to bring investors into that market. But as per a lot of big markets that lots of investors are interested in, it's expensive. So you've got to figure how your deal is going to stack up. But there's certainly a lot of opportunities happening as the city takes on a polycentric form and distributes its interest and creation of new neighborhoods and communities and business communities, etc.
Right, Damian, thank you so much for joining us.
Okay, my pleasure. Thank you.
Thank you all for watching.